and it says we're live. Hey, Eric.
Hi, Chris.
I mean, it says we're live, but you know how these things are. It probably always takes a few seconds. So um, we can talk about other things apart from finance for a minute or two until everybody catches up. You've got a 3 day weekend. You were just telling me. Why do you
Yeah,
guys Why do you guys have a 3 day weekend in Sweden?
because it's our Flag Day or National Day tomorrow, and that
What
means we're off.
what is a flag day exactly? What actually happens?
Honestly, I don't know, man. Like, we're not so patriotic in Sweden, so basically it's just a free holiday.
A
Uh,
free holiday.
yeah, that's basically it. Because like after the winter time and everything, people want to have some free days, I guess. Uh,
Yeah. You
yeah,
guys seem you guys have seem to have loads of public holidays, or is that just me? Or do you have lots of public holidays?
I mean we do, but like they come like after another basically. So we had
Right.
one public holiday last week, and then we have one now, and then in 2 weeks time we have midsummer, which is
Of
also a public
course.
holiday.
Made
Yeah,
famous by that horror movie where they
yeah,
kill all those American tourists.
yeah, it really put us on the map.
Yeah.
So
Very good.
yeah, that's basically it. But you're
Okay.
you're working tomorrow.
I
uh,
am. Unfortunately, I'm working tomorrow, but that's all right. But that's why we're recording this today instead of the end of the week.
yeah.
So yes, welcome everybody. There you go. A brief history of Swedish public holidays. But today we're talking about the month of May, what happened in the markets, and what we can learn, if anything, from what happened in May. What's going to happen over the summer. And Eric, I think we've got a few questions for me as well. We're going to be looking mainly at the DXY, the Euro USD, and a few other bits and pieces. But before we kick off, I just want to point out to everybody what we're looking at in the charts currently. If there are any traders on here, you would have seen the Euro USD is spiking here, um, and that the DXY, the US dollar index, has fallen. This is off the back of soft data coming out of the United States. There's expectation for a rate cut by the Fed, which Trump has been lambasting Jerome Powell about recently on Truth Social, etc. And also, we've seen the ECB cut rates, but that was expected. That's pretty much priced in. Lagarde is speaking now as we speak about that. But we're going to rewind and we're going to go back to the beginning of May. So, Eric, why don't you kick us off? What do you got?
Yeah, I mean, like, as in every month, and you just mentioned his name. Uh, Trump's Trump is always doing something, and has he done something that made that is kind of severe or big or something?
Yeah, yeah, he has. I mean, and we're going to get to it. I mean, it's not what he has done; it's more like reactions to what he's already done,
Okay,
which is what we're going to get into. Um, but before we get into what Trump has, well, the consequences of his actions, then we will. Let's start with the very beginning of the month, where we had on. We can see here we're looking at the U.S. dollar index. We had on May the 7th. We had the Federal Reserve Monetary Policy Open Market Committee. They met and they kept rates on hold, and this was widely expected. Trump, as I said already, was very unhappy about it. And we can see here, it didn't, I mean, because it was expected, it didn't really move the dial. It's quite, there was a small uptick in the DXY at the time. If we look at the Euro USD, didn't really change things that much. We can see here, I mean, there was a small, the euro weakened a little bit against the dollar. But that was widely expected. But the main issue, the main story out of this is that the Fed was saying uncertainty about the economic outlook has increased further. And this is what Trump has been criticizing Jerome Powell, the chair of the Federal Reserve, about a lot. You know, he's been giving him a lot of stick, saying that he's waited too long and to cut rates. And Jerome Powell, to his credit, has kept saying, "Look, you just turned the entire economic playbook upside down. We don't know what's going to happen. So we're pretty worried about the effect of everything that you've done. So instead of jumping to any conclusions, we're just going to keep everything stable at the moment." So you can kind of see where he's come from. But it's interesting going back to what we saw today with the soft economic data. I mean, I know it's technically June, it's not technically May, but that we're actually beginning to see real weakening in the U.S. economy. We're seeing jobless increase tomorrow. We've got the NFP, which is the big jobs outlook for the United States. So we'll probably get a better idea of how weak the American economy is getting and how quickly it's getting there. So that was on the 7th of May, and then. But what's more interesting, so that didn't really change the dial here on the DXY. But you can see here on the graph, this spike, that this was really threw the cat amongst pigeons, I think. And it's something that we're still feeling the effect of now, which is that the United States and China agreeing to a 90-day trade truce. So they both said they were going to lower their tariffs. I think China to 10%, the US to 30% for a 90-day period while they negotiated. And we can see here everybody was very excited about this. There's a lot of I mean, it's the thing, like what we're seeing a lot in the markets recently. It's not good news. It's that the bad news might not happen, right? And so the absence of bad news, or the bad news being taken away. And again, this I was talking about the consequences of Trump's actions, rather than anything he's actually done himself. Look, I mean, for the United States, it's incredibly important, and for China as well, to get some kind of tariff deal done. I mean, the reliance between the two countries economically, not just for large companies, but for small and medium businesses across the board. We're talking, hundreds of millions, billions, including the Chinese, billions of people really need this deal to be done. Something to be done here. It's unsustainable. I mean, you've got chaos in the freight ports on both sides of the Pacific. The whole, I don't know if you saw this story about Barbie dolls, the price of toys in the United States. I mean, all the toy makers are going mad, because they bring everything in from China. So it's everybody but I mean, even, the guys who supply fertilizer to the farms out in Iowa, but also the Iowan farmers. I mean, most of their grain, a lot of their stuff goes to China. They need to get something sorted out. So we can see here, markets are really happy here. The dollar shot up. Everybody was pretty content here, saying finally these two are getting down to the table. But we're going to park that for a minute because there's more news to come there. And I want to talk about something else that happened a few days later that's not really that visible on these graphs on the DXY. And that is the Moody's downgrade, which happened on May the 16th, which is here. So on May the 16th, the Moody's, one of the big credit agencies, downgraded US debt from its AAA rating. It was the last credit agency to drop. And they cited, what did they cite? They cited that steady deterioration in U.S. government. This is Fitch, but I mean, the same things stand. Like, I mean, they're worried about U.S. administration's governance of its debt because we've now seen successive presidencies. We've seen the last president actually try and do anything about U.S. levels of debt was Barack Obama. Trump's first term, Biden's term, and now Trump's second term, everybody just keeps on piling on the debt. And, fair enough. And so people are beginning to get a little bit concerned here. I mean, if the United States wasn't the United States, if it wasn't, the most powerful and richest country in the world, you would call this a basket case in the way that it runs its debt. But because it's got so much power and the kind of this American exceptionalism behind it, this idea and wealth behind it, the debt pile just can keep on getting bigger and bigger. But there is going to be a point where the straw that will break the camel's back. And I wanted to talk about this a little bit because, like I said, markets shrugged it off pretty quickly. There wasn't much movement. We saw a decline in the DXY. We saw a decline in stocks. We saw bond yields briefly pop above 5%, but then everything kind of righted itself shortly afterwards. And so I want to talk about why this is happening, why there isn't such a big move. And I think I've kind of explained it there, in that investors are thinking at the moment that this is a long-term problem. This is not a short-term problem. But this is the thing about short-term problems. At some point, they become long-term problems. And so
Yeah.
I want to so I've got a piece here from Real Investment Advice, which is an investor hub in the United States, and there it's really interesting because they say Moody's downgrade. What does it mean for stocks and bonds? And their thing is this time different? Talking about other downgrades, S&P has downgraded the debt, and however, is this time different? The answer is no. What should an investor expect? And they're basically saying buy the dip and saying this is nothing to worry about. This is going to be absolutely fine. And this is really, these are conservative, big institutional investors in the United States giving this advice. So you'd think they're probably right. But then you look at the FT, and and they say the same thing. Past downgrades, they failed to scare off investors. And this time we've seen a jump in yields. As long as the US keeps on honoring its obligations, as long as it keeps on paying off this debt, then what's the problem here? What's the problem here? But and it says here losing AAA status across the board is a symbolic blow to American prestige. It should spur Washington to get its fiscal house in order before facing the dollar and the nation's financial exceptionalism erodes in earnest. Again, this is not an immediate problem, but it might be beginning to become a long-term problem. And
Yeah.
this is something that just today the FT has talked about again. And this is something that we're seeing, and it may be the beginning of a long-term problem becoming a short-term problem, because you're seeing big institutional investors, and it's not just a downgraded debt, but Moody's is kind of like the canary in the coal mine, right? They're saying, hold on a second, things are getting weird, things are not cool in the United States, and a lot of people are agreeing. Then it's not just the debt, but now it's Trump's big, beautiful, tax relief bill, and just the chaos that's engulfing this administration, the tariffs, everything that we're seeing, the way he's handling the economy. And we're seeing these big institutional investors are moving money out of American markets. They don't have anywhere really that they want to put it, but they're moving it generally into European markets at the moment.
and
And
and this will obviously affect the dollar, maybe
yeah,
like not in short term, but particularly in long term. That's
well,
correct.
it is affecting the dollar in the short term, and this is why
Oh,
we can see the DXY throughout the month, and but this is what we've been seeing throughout the since the Liberation Day tariffs were announced in April. We're seeing the dollar slide, right? We're seeing the dollar continue to fall month and month and month, and and what's interesting is that you've seen stocks recover a lot of their their losses since then. But what's interesting is that the S&P, and this is what really I want to point out here, the S&P 500 is 2% up this year. And everybody would go, okay, yeah. So what's the big issue? The S&P is 2% up. The Stocks Europe 600 is up 9%. That's the issue. Is that if it wasn't for all of this, what would we have been seeing in the stock market in the United States? We probably would have been seeing a lot better returns.
yeah.
Instead, we're seeing small returns, and we're seeing a lot of this money that would be that would be giving these returns to the United States. We're now seeing them spread elsewhere, and it's not just in Europe; it's going internationally as well. And shifting money to Europe is not a bad bet. Governments are relatively stable here, and the macro backdrop in Europe has not been more benign in the US, but it's more stable. It's not just the trade wars, but some of the domestic instability in the US and the proposed tax bills that impact non-US investors.
Yeah.
So you see what I'm saying? I'm trying to weave a narrative here, and where it all kind of fits together with Moody's, the end of American exceptionalism, Trump's tariffs. At some point, this long-term problem is going to become a short-term problem. Are we seeing the beginning of it yet? I don't know. Markets certainly don't think so. But it is something that I want, especially long-term traders, to have in the back of their minds. That this is what is a long-term problem might be becoming a short-term problem. And a lot of that will remain to be seen over the coming months, how these tariffs are handled, how markets respond to Trump's big, beautiful tax bill when it does come through. Because this is what happened to Liz Truss in the UK. She tried to pass a big, beautiful tax bill, and then she got thrown out on her ear. She was kicked out of She was forced to resign after 30 days. Um, Trump can't do that. Trump won't resign. He's president. So what happens in here is a very interesting story, I think. One for long-term investors to look out for. Going back to May, I want to highlight this now on the 28th of May. And this is another bit of Trump's, the consequences of Trump's actions coming back to bite him in the arse, if you excuse my French. On the 28th of May, the International Court of Trade in the United States handed down a ruling saying that Trump's tariffs were illegal, that he did not have the power to push these tariffs through. And we can see, right, how the dollar reacted. The dollar went through the roof. Everybody went, yay, no tariffs. This is amazing news. And then the next day, another appeals court said, no. You, the International Court of Trade, International Trade Court, you don't have the right to tell Trump that he doesn't have the right. And now I know, American courts, man. And but now another court has got involved, and we can see here, when that court struck down the International Court of Trade, you can see here the dollar slid again, and now we're in this position where there's all these courts saying different things, but it's all working its way through. It is going to end up at the Supreme Court at some point. I think there's another court hearing later today, but I don't think investors should really, our traders should really pay attention too much to these, because all they're going to do, look, they're going to provide volatility. If you're a technical trader, it's going to be good news. But until the Supreme Court actually makes any decision here, we're not going to have any kind of final decision on this. And what the Supreme Court decides is going to be momentous. Because imagine if the Supreme Court turns around and says, "Oh yeah, actually Trump's tariffs are illegal," and we've had all of these countries flocking to the United States trying to make trade deals with the White House, trying to lessen this blow, and then all of a sudden they're made illegal. But it also sets up a real showdown between Trump and the courts, which is political instability. There already political instability in the United States, but that could really set the cat amongst the pigeons. Finally, I just wanted to make a point. I did say earlier about the 90-day truce between China and the United States, and how investors are quite happy about that. On June the 2nd, just a few days ago, the Chinese accused the Americans of violating the terms of the truce. And it was tit for tat. The US is accusing the Chinese of violating the terms of the truce as well. Today, Xi Jinping and Trump have talked on the phone. What does that mean? Are we any closer to any kind of resolution here? Who knows? But definitely one to watch over the summer. So that's those for me are the high points for May. Is there anything in there you want to pick out, or anything else you want to discuss?
Not really about that. But you mentioned before tensions, right? And we had quite a long-term tension. We saw it up in the beginning of May also. And that's the one between India and Pakistan. It was quite nerve-wracking there, honestly, I have to say, in like 2 days, something. Did that escalation, I guess, affect the market in some ways?
Yeah, it did, and it's a really interesting case point, actually. It didn't affect the wider markets because, I think usually in more normal times, I think we would have seen a larger look. What date was that? That was on May the 9th. And you can see here on May the 9th, we had, there's not much movement in the dollar index. But what's interesting is the frenzy that happens in more localized markets when these kind of conflicts take off. And what we're looking at here is the US dollar to the Indian rupee. And so we can look here. This is the 8th and 9th. This is when the conflict went around. And you can see the absolute madness here between the US dollar and the rupee. You can see the rupee collapsed really quickly. This is people selling out the rupee. And then interestingly what happened, and there's no confirmation of this, but a lot of market watchers are saying that it's true, is that the US, I mean, the Indian state bank basically intervened to stop the rupee from sliding. So we can see here the following day, we can see the rupee gaining ground against, stabilizing against the dollar. But we see this a lot when you have geopolitical events like this, unexpected geopolitical events, and then often on the back of this, we see intervention.
Yeah,
Um, we saw this last year with the yen to the US dollar when the Japanese yen intervened. You get these kind of crazy graphs. I mean, the in this case, I mean the USD dollar to the Indian rupee is not heavily traded currency. But it's also pretty volatile, as you can see here. Anyway, a lot of Indian traders would be trading it quite heavily, and I can imagine more than a few probably made a lot of money and then lost a lot of money, or vice versa, on this day. But yeah, these kind of events have huge effects on the markets. And like I said, in more normal times, something like that probably would have really had an effect, a wider effect in the market. But because the world is so engulfed in craziness at the moment, between the tariffs and the war in Ukraine and the fallout from every time Trump gets onto Truth Social or onto Twitter, just isn't time for investors really to take notice. Oh, it's just a threat of a nuclear war in South Asia.
yeah.
Nothing to worry about here. No, we can't. We're not. Don't have time. Don't have time for that.
And also,
Um,
it feels like people are kind of like, I would say, kind of not bothered anymore because it's so, like, it's conflicts everywhere,
yeah,
basically.
exactly,
Yeah,
exactly. No, the world is an interesting place at the moment,
yeah,
and it helps that it was quickly subdued, the violence. I mean, who actually stepped in, whether it was Trump or whether it was Putin or what happened there entirely is a bit up unknown. But what we can say is that it was subdued. It's still rumbling on. Obviously, they're not. Trump, I mean, Pakistan and India are never going to be the best of friends. It's still
no.
rumbling on, and there is potential for flashing up again. But currently, I think it looks like it could be a little bit more stable going forward. Hopefully, fingers crossed.
And speaking of stable times, uh, and it's summertime
Mm,
in Europe, at least now.
yep,
It's 5th of June. So I was just like out of curiosity because it feels like people goes on holidays. Like I'm going on holiday tomorrow, for instance.
yep.
Does like the Forex market also like take a short vacation, I guess?
Um, does the forex market take a vacation? No, is the
No.
short answer to that. The forex market does not take a vacation. Forex market is 24/7. Sorry, 24/5. 5 days a week, 24 hours a day, all year round. So it doesn't. But look, things do get slower in the summer months. This is just because traders do take vacations, unlike the forex market. So people will go on holiday. So you'll find that, especially in Northern Europe in July and August, things get a little bit quieter. This time round, I'm not so sure that's going to be the case. I think there's too much going on. I think the world is a bit too crazy. We've got a lot of things on the boil at the moment. There's China-US negotiations over tariffs. We've got a lot of other tariffs coming into play. Um, We've got negotiations potentially over Ukraine, Russia that are taking place. We're seeing rate cutting cycles both in the UK and in Europe. We're going to see. It looks like we're going to start seeing the beginning of rate cutting in the US. And with Trump at the helm of all, at this circus of madness, who knows? It's the unknown unknowns, as Donald Rumsfeld is famously quoted as saying. What's going to happen? So I think I would say yes, the markets might be a little bit quieter in the summer. This summer, I don't think they will be. I think we're probably in for a continued roller coaster over the next few months.
Yeah. And but during the summer, like because you said people are on vacation most of the time.
Mhm.
Forex traders, like in general during the summer, uh, what do they think about and do to still be active?
Yeah, I mean, this is a lot of things. I mean, if you're a forex trader, you never really stop trading, right?
Yeah.
Um, what people do is still be active. I mean, I think, I mean, what I do, and I think what a lot of other traders do, they'll take their laptop with them. They take them on holiday. You don't want to be trading while you're on the beach, right? So
No.
you will be trading less. But take your laptop with you. Make sure wherever you go, you've got a good, stable internet connection. As I said, the summer is going to be particularly, I think, is going to be unusual. So don't, if you are thinking of trading, don't think you're going to hotspot off your phone, or something like that, in Bali, somewhere, make sure, and if you are particularly concerned about particular, I would look at check economic calendars before you go. If you're worried, if you want to trade around the NFP, or if you know that, around the Federal Reserve, the Monetary Policy Committee meeting, anything like that, make sure you've got your calendar in place. Make sure wherever you're going, you've got a good internet connection. But I mean, my advice also to you is do take some time off. It's been a crazy, crazy year. It's not going to stop being crazy. Like I said, throughout the rest of this year, and I think it's really important that traders, like everybody else, get a proper break.
Yeah.
The volatility is going to continue. There are going to be opportunities, I think, throughout this year. So be good to yourself and take a break.
Yeah. Like I'm not trading Forex right now, but I'm still going to take a break. Good as well. Hopefully, at least. I got one more question for you, Chris. And it's, if we go back to like conflicts stuff, we're ending on a good note, right? It's about the Ukraine-Russian war again.
Oh, this is a good note, is it?
Yeah, this is good note.
Okay, all right.
I was trying to have the British sarcasm with
Sorry.
you. But yeah, I mean, what happened like during like the last couple of days has been mental with the Ukraine, like
Oh yeah.
on the planes and stuff. But I was just wondering, like, because I was looking into news and said something about there are proposed sanctions on Russian oil now, and I know oil. You're probably not figuring, or you're probably not thinking about oil during this time. But can that also affect the market?
Yeah, I mean, the oil price is an interesting thing actually in general. So this is WTI over the last it's a daily chart. So we're looking here. This is basically from the year, and we can see oil prices slumped over the last year. A lot of this is to do with OPEC plus. The cartel, the oil cartel, they've announced reductions, they've announced cuts in oil price, but none of their members, well, very few of their members actually followed through and did cut oil. So what we're seeing is a glut in oil at the moment. A lot of this is to do with their members, due to inflation and everything. They need the foreign reserves. So they've been selling oil even though they promised to OPEC that they wouldn't. They are going to continue doing this, and as a result, OPEC has since said, "Okay, fine, we're not gonna cut anymore." This is also what we're seeing here is a reaction to a lot of developing countries still taking Russian oil, and as we know, Russian oil is sanctioned in a lot of places, but countries like India and all across Southeast Asia. And a lot of places in Africa are still buying Russian oil, and they're getting it very cheap. So demand for unsanctioned oil is lower. We're going to continue. I think this is all having a downward effect on oil price. The sanctions that you talk about, they're just being proposed. It's a bill that a hawkish senator has put through in front of the Senate. What it will do is it will force countries like India, which is a major purchaser of Russian oil, to no longer purchase Russian oil, or at least a lot of it. And what this will do, obviously, this will push up inflation in India, but it will also, you should, in theory, further cripple the Russian war machine, which is beginning to show signs of slowing down economically, which I think partly is why Putin is starting to come to the table. He knows that the Russian economy can't do this forever. So that will continue to put pressure on Russia, put further pressure on Russia. Will it affect the oil price? I think it will. I think we'll probably see prices recover somewhat in crude, but the problem is with oil prices, it's very much linked to long-term outlook, right? And the long-term outlook for growth, the OECD and the IMF have been slashing the outlook for growth over the last since Trump became president. They know that these tariffs are going to have a negative effect, not just in the US, but worldwide. And that is bad for oil prices. Low production, lower growth, that is going to have a knock on effect to oil prices. And I would fully expect oil prices are probably going to continue, as we can see here, this downward slope, especially in the long term.
Yeah. Well, that's interesting.
Yeah.
And yeah, and it's been an interesting month. Uh,
They're always interesting since Trump comes to office. I mean it's great to talk about. I mean it's great for traders. It keeps you on your toes. There's a lot of volatility out there. I mean, Alison and I just did a podcast about how to trade in volatile times, how not to lose your shirt. I recommend going back and watching that if you want to keep on keeping your toes. But yeah, experienced traders, professional traders, institutional traders, making a lot of money, making a lot of money right now. And yeah, and as I said, I think it's going to continue. It's going to continue being interesting for some time.
yeah. Well, that's basically it for May, I think. If you
It
don't
is.
want to talk about anything in particular.
And that's it. And I'll see you again at the end of this month or the beginning of July. We'll have another chat and
Yeah.
see. We'll probably have another crazy month with entirely unexpected things to talk about.
Yeah.
Superb. Well, Eric, thanks so much for that. Thank you, everybody, for watching as always. And as I said, me and Eric and I will be back in a month's time to look over June and to see if anything has calmed down or if we're still bouncing through this mad roller coaster.
Yeah.
Sounds good. All right, Eric. You have a great Flag Day and a great weekend, and everybody else wish you all the best. Thank you so
Yeah.
much.
Thanks, Chris.
Bye.